Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your trading week wrap-up, the end of the week show. Yeah, you can tell I even need to have my microphone on for this one. How about that? I'm trying something different here today. Hopefully, my internet connection does not cause any problems. Usually, that's where the issues tends to seem to rise up, is my internet. I'm doing a low latency feed today, which means that the speed of this should be incredibly fast from the time I ask a question to the time you guys can give chat. Sometimes there are issues on your side as well, so let me know how things go today. As Katut says, prayers for those in Myanmar and Burma and Thailand. Man, I don't know if you saw the video footage of the earthquakes in Thailand. Obviously, it was epicentered in Myanmar, which is northwest of Thailand. But the impact on Bangkok was shocking. Really kind of crazy to see such swings in those buildings, these skyscrapers in Bangkok, which is an area that I really like. But man, talk about making your stomach turn. Just watching those rooftop pools, which are common in Thailand, just rain down thousands and thousands of gallons of water on the people down below. Absolutely crazy. So yeah, I hope all turns out well. I will say, there were a couple buildings that collapsed, and most of those were under construction. I was very happy to see that some of those big skyscrapers, actually all the big occupied skyscrapers, were still standing. An earthquake like that could have devastating impacts on big buildings. So good construction goes a long way. So yeah, hope all turns out well there. And as what was that? Fiber is 100% if you can get it. I use fiber, John. I use fiber I've been using fiber for 3 years now. Just sometimes it's intermittent. I don't get it. AT&T, gotta love their consistency. So, let's go into our trading week wrap up. Before I dive into that, though, let me just say I did have a meeting today with a graphic designer, and I will come up with a timeline here, but probably in the next month or two, we'll have a whole new different graphics package, a whole new different look and feel for this show. Some of you may like it, some of you may not like it, but I just feel like it needs a refresher. I may redo the logo as well. I've been asking you guys for some input, and some of you have sent in some good suggestions, which I will incorporate into the new look, feel, layout of the Trader Merlin show. And again, if there's anything that you want to add or contribute or let me know. Visually, effects, shows, things you want to see, and I will try to incorporate that in as I build out. I still haven't signed on the dotted line yet, but we'll probably come to some agreement this weekend about how much I want to have done for the show. So hopefully you guys will like that. But it should be pretty fun, and it should be good. Also, you guys might have been on this Ghibli frenzy, the GHIBLI frenzy, which is a style of animation. Of course, I just had to do one for the Trading Week wrap up, and that is, I believe that this one was through Grok. It's either OpenAI or Grok. I've been using both of them to do graphics now. Midjourney did not give me anything good, but I wanted to have a picture, an animated picture of me, which apparently is with high waters, and with the glass of whiskey, of course. Cheers in the camera as I am doing right now. So cheers, everybody. Hope you had a great week. I will say, not a good Friday for me. Not a good, it's for some of the bigger positions. You guys know I've got a large position of MicroStrategy, which was down, well, not large. It's a good-sized position, MicroStrategy, which was down over 10% today. That's not good. That wasn't good. SMCI I'm protected on, and I still have NVIDIA puts expiring next Friday at 108, so should be okay there. But all in all, the MicroStrategy did some damage today, as well as crypto. So, cheers to you all. Let's dive right into the topics du jour. What's going on? It really revolved for my end. Is it bourbon? It's always bourbon. It's always bourbon. Well, not always. I use some Japanese whiskeys. I think this is called Surf City, Surf something. It's one that's made out of Huntington Beach. There's a little distillery down there. Someone bought me a bottle of it. So going a little Surfside today. So let's talk about this market pain. If you guys watch the John Rowland show, he has a show called Market on Close, which is always entertaining. Good stuff out there. Him and Thomas do a pretty good show talking about the markets. And, from John Rowland's perspective, he did feel like this market's going to be going down. I echo that sentiment as well. I do think we're going down this morning on the open. I reopened my short position on the S&P. You guys know I had a short position, or I went directionally short with puts I was stopped out of that one, and as we came back down below the lows of yesterday, I reopened that position. So I guess I got jigged out of one. Let's see if I can maintain this one a longer period of time. But I do think that we are starting to go down a little bit further to the downside. And we'll talk more about that as we progress. But let's start off with the technicals here and look through our charts of market pain. Obviously, that big red candle there is the biggest one we've seen in quite some time. May even rival what we saw back here on March 10th, which is a huge down day. Now, in the grand scheme of things, what this means to me is we're going to be challenging these lows right around 55.09 probably by early next week. I think it will be early next week. And here's why. I think that the talk track over the weekend is going to continue to put pressure and fear in the markets, and we'll see more downside movement just based off the tariff talk. However, I think when we get to Tuesday or Wednesday's official announcement of the tariff smackdown, if you will, I think it's going to be a bit of a backpedal. I think the inflation side of things are going to ease a little bit. Again, we know that Trump is shock and awe. It's what he loves to do. Fine, we just have to figure out how we can trade that. At this moment, these markets are panicking because of uncertainty. There's several factors, but the big overwhelming piece for me is the uncertainty, and I feel like a broken record for the past 2 weeks talking about this trade tariff stuff. But yesterday, I brought up a whole bunch of different tariff talk points on the Monday Morning Must Knows that's coming out for Trading Academy. I will go kind of a deeper dive into all of the different tariffs that are coming in. But I do think you'll see him backpedal on Tuesday, and that will probably create a little bit of a market rally. I know. So sell off down to those demand zones on the S&P, which is the turning point from back on March 13th? Yeah, March 13th low. And then see this one start to bounce a little bit to the upside on a kind of a relief rally. But I don't think we're out of the woods yet. You know, if we look back here and zoom out a little bit, it feels kind of like we're going to get the stair step down. We're going to probably get it to come all the way down to 55.09, bounce up off that little, okay, Trump's not going to have his heavy tariffs. It'll be okay. And then we'll challenge it again. The more we challenge that 55.09 level, the more likely it's going to break, and we'll start to target some of these other turning points like 52.41 on the S&P. All in all, an ugly week. When you want to look at the weekly numbers here, well, I'll show you two things. Number one, we'll do weekly. So here's your weekly on the S&P. I'll zoom out of here so we can see it. Erasing everything from last week and then some. And when we look at this on a monthly time frame, that's where the picture really, in my opinion, really starts to change. And, you know, we've seen panic start to sell in, fear and uncertainty really starting to mount. And again, I am definitely in the bearish camp at this moment. I do think that the rallies should be shorted here. I've got some long positions which make me a little bit nervous. The biggest one being MicroStrategy, which I was anticipating Bitcoin rallying today because of that fear and uncertainty, and instead it's become it's a risk-on asset apparently, and today was not a risk-on day. So we started to see more selling pressure on Bitcoin, which was down 3.9% today. That hurt me quite a bit on that Bitcoin front, and the longer we forego a breakout to the upside here, the more I question the 4-year cycle, and some people are already calling for an end, saying that the 4-year cycle will not happen. I'm not out of the woods yet on the 4-year cycle, but it's starting to look pretty weak. And technically, we've been drawing this little channel up here in Bitcoin for the past 3 weeks. It's not done. It certainly broke outside of that channel, but all in all, it is still trending to the upside. It's just not as perfect as it was before. So unfortunately, we got a big down day. 3.9% I would argue is a big down day for the markets. Maybe not for Bitcoin, but it was an ugly day there. And I do have a large position, obviously, in cryptocurrency. I also have MicroStrategy. I also have iBit. So I've got a lot riding on the Bitcoin train here, which today certainly erased quite a bit of gains in the crypto portfolio, as well as in my swing trading and options account. So if you look at MSTR, that was a brutal day. Obviously, I've been selling calls against my position. I was really hoping we would close somewhere around 320 today so I could sell the 350s again next week. We will see next week what happens with MicroStrategy. We've been seeing over the weekend Bitcoin actually do okay going into Monday, but maybe that doesn't happen this time. So I'm anticipating a move up in Bitcoin over the weekend. However, I don't usually follow unusual options interest. However, John Rowland on his show today was talking about options interest on MicroStrategy and unusual activity, which does forecast, a significantly lower price for MicroStrategy over the next week or two. So we'll see if that unusual option strategy works. Sometimes options can be great to help predict markets. Ultimately, it's going to be Bitcoin that really is the driver there. So those were your big pieces from the pain point. Again, number one for me is this tariff uncertainty, and I don't think that's going to change all weekend or even Monday and Tuesday. Once we get to Wednesday's activity, I think it's one of those kind of sit on your hands days until after Trump finishes his speech to watch the digestion of all this information in the market. It will be wild because remember, it's not one segment. It's everything. It's food producers, it's electronics, it's commodities like copper and copper and steel and aluminum. It's cars. Name an industry that's not going to be impacted at all from this tariff talk, and I'll buy you a beer next time I see you. Everything's going to be impacted. So, yeah, that just is what's caused this fear panic sell-off today. S&P was down over 2.03%. It was not your worst performer, though. Technology taking a brunt of it, down 2.67% for tech. Same picture as that S&P, right? Some would argue that this is a bearish flag formation. I've heard that argument. So yesterday we talked about bearish flag for Michael G. Let's look at what this might look like for the NASDAQ 100 if, in fact, this is a bearish flag formation. So what I'm doing is I'm going back to the peak of the sell-off, or the not the all-time highs, but February 18th high to the March 11th low, and using that as the pole for this bear flag. Now I'm going to create an offset here. I believe I can do that. Clone, boom, there's my offset, just to give me a general idea. Now, there is your bearish flag formation, and as I've mentioned before, the way that you use this pattern is the pole becomes the measuring object, which gives you a target of where price may go to if it in fact does break. At this moment in time, if you're looking at the NASDAQ 100, as I am on that chart, that low point is 16,810. So let me, and that's rough, right? And 6,000, let me just make this an easy one, 810. There we go. So that's the target based off of this bearish flag formation pattern. Now, to give you an idea of how far of a move that would be a total decline based off of what we see on that price chart. Let me just zoom in here. That'd be a 24% decline off the peak from February 18th. That would be pretty bad. That would be pretty bad. Let's see. Big, what'd you say? Gold at $3,100 a day. Yep. Good one. That would put the NASDAQ. Yeah, exactly, Steven. That would put NASDAQ roughly 25% down. And Big Eb's point says that would get the Fed to cut rates early. Not necessarily. And this is where we are now in that conundrum, guys, of what in the heck do you do? Because Big Eb, on paper, you're right. If all of a sudden this market drops 20%, 25%, it's one of those, butt pucker moments like, we have a problem here. The natural knee-jerk reaction would be for Jerome Powell and the central bank to cut rates, right? That's the natural knee-jerk reaction would be lower rates quickly. Let's do a 50 basis point cut or maybe 75 to save this market from falling. However, if you do that, you're going to push inflation up higher by itself. And remember, we already have the tariff equation pushing inflation higher, and we already have the current numbers for inflation getting higher. I know, CB. I'm trying to be PG-13, okay? I'm trying to be PG-13 here. So the inflation data that came out today, let's take a peek at that because I'm not surprised, but it's one of those things when we look at data, I don't trust it. I think as a wide-eyed college graduate, I would trust economic data. As someone who's been in this market for 28 years, going on 29 now, I don't trust it because not only does the data seem to lie when I read it, but I've also interviewed people who are the ones making the data and they tell me it's manipulated. So I don't trust the data per se. So let's look at the inflation number. And remember, this is the number that the Fed is using. That's the core PCE price index. We were expected to stay at 0.3%. We jumped to 0.4. Now, this is not catastrophic, right? This is not like the end-all, be-all for inflation. But notice that the last time we were at 0.4 was back in February of last year. Before that, it was May of 2023. So we're like on a once-a-year cycle. But the trend, no one here can argue, the trend on CPI, Consumer Price Index, is quickly accelerating. Back in December, it was 0.1%. Back in January of this year, it was 0.2. March, 0.3. 0.4 as of today. So if this does continue that stair-step up approach, the peak of inflation on CPI that we had was 0.7. Based off this rate of acceleration, that could theoretically be in 3 months, right? Because 0.7, we're currently at 0.4. That means you're looking at the numbers for April, May, and June. So by the end of June, if this inflation number keeps on its track, which I don't know if it will, I'm speculating here, you're seeing that inflationary number jump higher and higher and higher. If we get to 0.7, then we are right back to the peak levels of inflation we had in this country. That is the conundrum, as Steve puts in there. Yeah, you're right, Steven. Stagflation. Bum, 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 bum. You needed, I think, bum, 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 bum. You needed 4 bums there, and the last one has to have a longer M on it, right? The dun, 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 dun. Yeah. And this for all of us should definitely spell market going down a little bit, right? Because if we do get to that 0.7, and I'll be honest, I don't believe we will. Not in 3 months. I think that this is a bit of an outlier, but the trend is certainly proving to be consistent over the last 4 months. That means that by the time we get to where my cursor is, that could put us theoretically at 0.7. I don't think we'll get there, but does it happen by August? September? It very well could. We just don't have any clue based off the current tariff situation. So the Fed will not be able to slash to lower rates if that happens. I mean, honestly, I think we're getting to the point now where the Fed can't. At 0.4 or 0.5, I don't believe the Fed can cut rates. What does the market say here? Let's go out to my countdown to the FOMC, and this may not be updated yet, but let's see what the numbers are showing us here. Okay, come on. There we go. Right now, our next meeting is going to be May 7th, right? So we got about another month to go. It's a little over a month. 83% chance that we stay right where we're at, and a 16% chance that we're going to drop 25 basis points. Has that changed? Not really. A month ago, there was a 31% chance. Today, there's a 16% chance of a rate cut. So it doesn't look likely. And I believe that over the next couple weeks, you'll see these numbers change. If inflation continues to move up, guys, the Fed is backed into a corner. And I don't know what they'll do, but I imagine that they're not going to cut rates. And Jerome Powell has said he's not going to be pressured by the president. Trump is begging and demanding that we lower rates, which would cause more inflation. So it is definitely going to be a very exciting remainder of this year. Margaret says, raise rates more likely. Boy, and what does that do now? On one hand, Margaret, if everything's remained constant, the Fed should lower rates. Stimulate the economy, let's get things going. However, that inflation factor is too important. Remember, their dual mandate is unemployment and inflation. And right now, inflation is the ugly one that's bugging them, so they have to go after that. They can't go and say, we need to stop the markets from falling. That's not their objective. It's certainly a good after effect, right? You would love to look back if you're Jerome Powell and say, we met our objectives of keeping prices stable, meaning lower inflation at 2%, which is their target, and keeping unemployment in check. Unemployment's fine right now. Slightly increased, but no big deal. Inflation, a little higher than they want. If they can keep those numbers as it is right now without increasing them at all, then they can look back at whatever the stock market does and say, we'll take credit for any gains that happen. But if it starts to fall, it could get real ugly. And again, I don't know what the Fed's actions are going to be. I'm kind of with you, Margaret. I would believe that today's economic data, that inflation number that we saw, which was not good, is weighing very heavy behind the doors at the FOMC going, hey guys, I know we had talked about having maybe 2, possibly 3 rate cuts by the end of the year. That's going to change. And that's going to change very quickly. We'll get a much better sense of that on May 7th when we get the next FOMC announcement. And that'll be probably the most anticipated announcement of the year because it feels like we're starting to see those tides turn on inflation. We're starting to see GDP slow down a little bit here. Not a good situation. What does Steve say? I think I'll be buying some puts 180s out on Monday or Tuesday. That's what I did. I bought puts out for the end of July. And I may add to those positions. But again, technically, if you look at that S&P, I bought them on the break of yesterday's low. Bought back, I guess, on yesterday's low. Right here, when we get below 55.09, that'll be an add 2 point for me. Add to the position. I may add some next week. We'll see how it performs, but I certainly would like to build a bigger position. I don't think I'll ever get as large as I did during COVID. I had 420 puts short, or 420 puts long puts. That was a bad idea. I'm going to sell T-shirts that says Bill Addis was right. I love it. I absolutely love it. You know what? I'll tell you what. If you make that shirt, Jeff, I'll buy it and I'll wear it on the show. And we send one to Bill? Right? Would he wear his own shirt that says Bill Addis is right? And the question I would say is, do we use the animated graphic that I have of him as the Bond King where he's screaming like that? Maybe I'll work on it. That's a great idea. I love it. Bill Addis is right. It's one of those things I find it interesting because most of the economists out there, I have not actually heard of one that's saying we're going to get rate increases of anybody who's respectable, right? There's a lot of offshoots and wackos that'll call whatever they want just to be shock factor. But any legitimate guy is not forecasting rate increases this year. Bill thought we're going to get them. Now, what do we see on this calendar here? And by the way, let me know how the stream's going. It feels like it's actually going pretty good today. Your response times are so much faster. It's really great. Lisa's dog, huh? Lisa, your dog is very literate. Its syntax and wording is absolutely fantastic. There's my speed. I should be doing pretty good. Let's go and look at December. What is December? Remember, the Fed said they said 2, possibly 3, getting down to 3.9%. Right now, there's a 33% chance of 3 rate cuts, and that number increased today. I don't see it. I did that for a speed test. Of course. I want to make sure I'm getting good speed for you guys, right? If Bill is correct, he will become a CNBC guru. Nah. I don't think Bill's a CNBC kind of guy. You never know. Let's switch to Starlink. I'll tell you, Andres, I'm not opposed to it. If someone could tell me that it was an absolute game changer to be with Starlink, I could see doing it. I could see switching over to Starlink. But I'm supposed to have fiber. And those speeds that you saw there, that's pretty good. I should be able to have this show with 0 problems. 0 problems whatsoever. And I see a spinning wheel right now on your screen. Dab nabbit. What did it say? He's a smart girl. Cool. Stream's great. I was thinking of doing that this morning, hoping to get the green day to buy him, but didn't want to do it. Yeah, hoping for a little bit of a rally so that we can get some more shorts, buy some more puts. It's tough, man. Today was such a fear day, just a panic day. And it's funny because I wanted to sell some puts on some other stuff and buy lower, but I did not. I was actually looking at selling a bunch more on NVIDIA, but I'm just going to wait a minute here. I don't want to have my long exposure too heavy. Not too heavy. What happened to the advertising because I haven't seen any recently? You mean on this show, Mike? Let me tell you. I figured something out. So I used to do advertising during this show. Because why not make a couple of bucks, right? I do the show for free, and I enjoy doing it. But hey, if I can make a couple bucks, great. I turned all that off because it made a couple $100 a month, but it was kind of annoying to you guys as the users. So here's what I'm doing. I just figured this out as of yesterday too. So my apologies to those of you who watched the show after the fact. If you watch this show live, I don't have any ads. I've turned all ads off for the show when it's live. But if you watch the show after it's posted on YouTube, I turned all ads on. So there's actually going to be quite a few ads on that one, and I'll generate money. It's incentive for those of you who watch the recording to join us live. You got no commercials if you're live, so there you go, Mike. That's why you're not seeing them. I've turned them off. They've been off for, like a year now. I really have turned off all ads. No problem, Margaret, no problem. You bought puts on GameStop from $25.50 yesterday, caught the big fish. Yeah, you just got to be careful with GameStop, man. You're juggling chainsaws. Look, I think GameStop is trash. I don't like their new Bitcoin policy either. Congrats on that $25.50 mark. It was a fantastic down day yesterday. I'd probably cash in on that one and enjoy those gains. But this is the type of security that will rip you apart, especially because you got such a rabid Wall Street Bets community and Roaring Kitty and all the press that it gets. And look, this stock's going to go to zero if it keeps its normal business plan. So it's just garbage company. I switch a lot because I like to ask questions. And Jeff, I like that you like to ask questions. My apologies if I don't get to answer all your questions, but there we go. CB says, how do you know the issue is not with your equipment versus the internet? Is it possible to have too much Wi-Fi interference if you're not wired or router misconfigured? Good point, CB. That could very well be part of it. It's weird is the way this house was built. I bought this house out of foreclosure, and it's let's just say that they rushed some things, and the walls are all wired with Cat 5, but for some reason this office, this room that I'm in, doesn't have it. So I've been trying to get an electrician out here to fix it and get a hard line. This is running Wi-Fi, so I should be doing hardline, but I have all kinds of monitors, CB, to check and see what's resource intensive, where I see bottlenecks, and typically it's a disconnect on Wi-Fi. So it's AT&T that's causing it. Pretty sure. My neighbor also had issues with AT&T's fiber. Yep. I'm pretty sure, John. I know. I have a buddy who was supposed to get me a guy to come out here. He has to cut the wall. Oh, thank you, Steven. Cheers to that. Dankeschön. All right. Yes, it says, it's funny. It's telling you, celebrate their first super on a live stream. I appreciate that, Steven. Thank you very much. Get a super long cable. I thought so. No, my neighbor's not on my Wi-Fi, but he's had issues with AT&T fiber. I'll look for alternatives, but yeah, hardline. I got to do hardline in this office. And again, in part of, just so you guys all know, you will be part of the development of this, whether you like it or not. So I may test out some different things on you visually. I like the new look and feel that my designer was working on for the new sets and shots. We'll have a lot of different pieces where it's not like this. There's a lot of wasted space here. We're going to change the way that is done. You'll have different things like the way the names are will look a little bit different with the lower thirds. These types of shots won't exist. They'll be side by side with bigger screens and really optimizing the real estate. So those are some of the bigger changes that will be coming here. But I'm also toying with the idea of moving this entire studio to an office I have downstairs, which is all hardline. And that's one of the main reasons I want to do it, because it's just straight connection, and I shouldn't have any issues. It's just a smaller office to work with. So not quite sure. I will see if I can see to do that one. By the Dip says, hey, Merlin, forgot to email you, but how about a rate my trade segment? I saw that, but I'm curious when you say rate my trade segment, are you asking for me to rate your trades? Like if you send in a trade to me? The only reason I be kind of a little bit nervous with that, the only reason I'd be nervous with that is it may come off as financial advice, and I can't do that. I even need to have disclaimers at the front of this that this is not financial advice. This is me talking about markets and sharing information, but ultimately trades you have to do on your own. If it's rating my trades, well, I don't want to rate my trades. Maybe. Where do you shoot those TikTok videos? Right here. Same set. Exact same spot. Yep. Literally, I just changed it to a stand-up shoot. So I've got a camera here. We'll just do Actually, that's all done with my iPhone, by the way. So I do iPhone recording of it, stand up and use the green screen. But I may move that going for here. I got 1 gigabyte fiber, and it never fails with 5 YouTube videos going at the same time. Wow, John. I've got 1 gig as well. I had 1 gig up, 1 gig down, but as you can see, I'm not getting it. Even if I kept with 439 up, download and 355 up, I'd be fine with that. Should be no issues whatsoever. So I'm pretty sure some of it has to do with my Wi-Fi, but also the router downstairs they gave me is a little bit weird. Hope you won't be an avatar instead of you. No, I will be the real person. I am working on AI avatars, which I think is pretty cool, but I'll always be me. I'll be me. You guys know I love doing this show anyway, even when I mess up. So let's see, what else can we talk about? There was a question from Mark asking, where do you see the closest demand zone on Lululemon? Okay, let me explain my talk on Lululemon for you, Mark, and others here. I don't get it. I just don't get it. Look, if I have... Let me give you an example of what Lululemon is. Hold on a second. Let me go up here and see if I can find a pen for you. Okay? I have 2 separate pens right here. I'm holding up 2 pens for the camera. One of them is black and one of them is blue, and they're made by different manufacturers. If I told you that the pen in my left hand is $10 a piece and the pen in my right hand is 30 cents a piece, and they all write the exact same. They have the same look and feel, same shape, same design. Just one has a name brand on it and one doesn't. How many of you would feel like you had to buy that $10 name brand so you could be cool with that name brand on your pen versus the 30-cent no name brand that no one cares about? That to me is Lululemon. It's expensive. It's good quality, but $150 for some stretch leggings that if you bend over too far, it shows all your private parts? No, that's not going to work for me. Not only that, but I can go to Costco and I can get 10 pairs at $10 a piece and buy 10 pairs for less than it costs one at Lululemon. I'm not a fan. I don't understand how you ladies and men can spend that money on Lululemon. It's absurd. It's one of those things that when I look at budgeting and I look at how you spend your money, like if you want to get ahead, unless you're flowing with money, you shouldn't touch Lululemon. Don't buy it. There's no massive fundamental difference between a Lululemon pair of leggings or yoga pants versus one you could buy on Amazon or Costco or some other discount place. It's mind-boggling to me. Yeah, John, sell me this pen. Sell me this pen. Consumer discretionary already getting hammered. Good. I hope more people wake up. You know, there are some things that are worth spending for, like a pair of jeans, a good fitting pair of jeans. I'm okay to go and buy myself Levi's, which is not top shelf, but I really do like the comfort fit of a Levi's 501 button fly, right? That to me is that if they fit right, it's worth it. Here's where you should spend good money. You guys tell me, when it comes to apparel, when it comes to the things that you wear, what should you spend money on? What's worth it to buy something that's expensive? You guys let me know. I'm curious how long the delay was there too. CB says boots. What kind of dude shops at Lulu? Hey, Martin, I know a lot of guys do. Probably because there's a lot of women in the store. Marketing, advertising, influences, spending, not me. Correct. Zapato, shoes. Yeah, you guys got it. Shoes, man. You want to make sure your shoes are appropriate for what you're doing, right? And if you're in construction, hey, get yourself a nice, good set of Wolverine, steel toe, Red Wing boots, whatever. If you're in the restaurant industry, get yourself some really good shoes so your feet don't hurt every day. But as far as a shirt goes, forget it. Go to TJ Maxx. Canadian Goose. Yeah, you're spending way too much money. It's a good jacket, but you can get way better ones at a quarter of the cost. Girls feel the same way about leggings these days. They do. Anyway, I went off on a complete tangent. My apologies there, but I guess trading is about finding opportunities to make money and take advantage of those opportunities. Consumer discretionary spending is the exact same thing as trading, just backwards, right? Because if I'm trading, I'm trying to buy a stock that's going to go up in value, or I'll earn something for my dollar. With leggings or clothing, I want something that's going to give me the best bang for my buck. And therefore, I don't need to spend a ton of money unless the most expensive option is clearly dominant in some way. In most cases, it's not. I would say that's the same thing for exotic cars as well. Lena's dog, I have expensive I've bought years ago and still here. I have not been in the spending mode for a long time. And Amazon sells great leggings way more or less. Yeah, exactly. And plus, fashion changes so quick, guys. Fashion changes so quick. In 6 months, you'd be like, I don't even like this color anymore. I'm not going to use that one. So, all right, that was my rant on Lululemon. That said, where do I see the closest demand zone? I don't care. I'm not buying Lululemon for any circumstance. And this is just a personal preference. I don't like Lululemon. I think that a company that's is $293 per share selling what they do and having these nice, nice stores and fancy, $200 sweatshirts and a gym bag for $300, forget it. I got a 10-cent bag I got from Vons and Stater Brothers grocery store I can carry my gym stuff in. Anyway, looking at this, I obviously would go for some of these pullbacks in the rally up. Right now, one that jumps off the page at me for Lululemon would be somewhere around 273. So you got about another $20 lower. What's that, about 8%? 7.5%, 8% from current levels. So that's the spot. But look, Lululemon's getting slaughtered. Its peak was back here in January 30th. And to where we are today, it's down 30%. And I think that that's just a lot of people waking up going, why do I need to spend on this? Right? Why do I need to spend on that? And how much were members-only jackets? I never had a members-only jacket. I'm one that when it comes to frugality and not spending money on name brand things, that you should write the book on me. I see no point. I'll give you a good example. This shirt I'm wearing This is called something vintage. What's it called? It's got a special name. Something vintage something. I can't read the damn name on it. I don't know. It's something vintage. I forget the exact name of it. But we went to Costco, and I found this shirt, which I love. It's a flannel, super comfortable, and they were like $19. $19 for a good flannel. I think we'd all agree that's fine. I'm gonna wear these. I wear them a lot. And then my girlfriend for Christmas bought me one because she knew I loved the style. Weatherproof vintage is what it's called. Weatherproof vintage. And she says, she knew I loved this thing, so she went and bought me one. If you go to their store, Weatherproof Vintage, let me bring it up here. Let's go see a Weatherproof Vintage flannel. Oh, they've dropped a lot. These things were like $60 directly from the store. Let's go here to the Weatherproof Vintage store. Come on. For this type of flannel shirt, which is, there you go, long sleeve flannel in blue, $65. And it looks nice, right? I think you guys, I think I might actually have this one. This is $65. I can buy them on Amazon, it looks like, for $30. And here's where you really get your deal. We walked into a TJ Maxx, for those of you who live in Southern California. We did the TJ Maxx over in the Tustin district. And they had a rack of nothing but weatherproof vintage stuff, and they were like $9 a shirt. Shop around. You find something you like, you get it, and you load up on them. I've got these in like every single color. It's just crazy. For $65, I want the line stripes to line up at the seams. Yeah, they don't line up. You should pay attention to those details. John, I've had one. I've had one. It's it. Only one. It wasn't because they're tax things for Lulu. I'm algebra. I don't know. I don't even look at Lululemon. If you want to know Lululemon, there is a guy that you should follow, right? Lululemon has a raving fan who always does technical analysis on it. And yeah, he's oh man, my brain is just absolutely not working today. The guy, yellow crayon guy. Oh, let me see if I can find him real quick. I can't believe I forgot his name. For some reason, my mind is not working on it. Anyway, I'll find his name. It is, jeez, the guy with the blue crayon. Oh, what is his name? Anyway, he's an analyst for old Yahoo, and for some reason, I'm just drawing a blank on his name today. Sorry about that one. But he covers Lululemon. He does a lot of analysis on it. It's like his favorite thing, and he's just constantly doing that one. So if I can remember the name, I'll show you. And he does analysis technical on it, the purple crayon. Eddie Barr's nice flannel. Look, again, you find what you like and you roll with it. All right, what else did I have on here today? So that was the Lululemon question. I talked about tariff uncertainty. And we got inflation data out of the way. We talked about market pain. So let me go through our top 8 here, and then we'll kind of wind things down for the show for today. I'll start at the bottom, which we kind of already touched on, which is, I now remembered. This is the beauty of having bad memory. Jeff Mackey. So Jeff Mackey, here's his page, right? He's an analyst, author, investor. If you scroll through here, there's Lululemon right there. All right, so he's got all kinds of his funny analysis. He draws all these funky little charts, but yeah, he is definitely a Lululemon fan. He's also a Nike fan, and he'll always be doing analysis on Lululemon and Nike. So there you go. You can follow him on X to get more insights into what Lululemon might be doing, but certainly not for me. I don't care. Lululemon can go away. All right, we switched. I had to switch up. It was getting hot up here. I went with my scruffy-looking Nerf herder shirt. One of my favorite shirts of all time is this one that I'm wearing, and I'll explain it for the podcasters. It's a Venn diagram where you have the two intersecting circles and the piece in the middle. And on one side, it says scoundrel. In the other bubble, it says scruffy-looking Nerf herder. And in the middle, it has Han Solo with a little Millennium Falcon here circling around it. So for those of you who are Star Wars fans, cheers to you on that one. Steve says, I own the stock and it's sucking. Well, I'm sorry, my friend. I apologize if I'm talking so negatively about Lululemon. Didn't mean to bash it. Look, I mean, I didn't like this stock at any price just because I'm not a fan of Lululemon. And that's important for me as a trader, right? I think for you as well. If you have an overly strong opinion about something, whether it's an overly negative opinion, like I have an overly negative opinion on Lululemon, or an overly bullish opinion like Larry has on NVIDIA, you got to be careful when you have those overwhelming biases, because it can skew you into buying something and holding it when you shouldn't, and vice versa, long or short. Next 2 to 3 weeks might be rough for everyone. I think it will be rough for everyone. It'll be rough for the investors, and I think it's going to be rough for us shorter-term people as well, because the whipsaw. The whipsaw is just unbelievable. But keeping up with the traditional moves that Trump does, I would think that there's going to be a back pedal, because right now the pedal's been slammed again to the floor. We're going to go into the weekend with fear and shock and like, oh no, man, tariffs. And then next week we'll get that uncertainty lifted a little bit, and he'll backpedal on some of those tariffs, not all, but hopefully we see at least some action here. And again, I am a believer that at this point in time, Trump has to do something to quit looking like he's not going to do something, right? He'll slap some tariffs on Wednesday. I just don't know what they are or how impactful they're going to be, and I do expect there to be significant market volatility because of it. So be very, very careful. All right, let's see. Go to... We already talked about the NASDAQ. Because you had such a risk-on event today, remember, when you have demand for bonds, you guys tell me, when demand is surging for bonds, what happens to yields? Does it go up or does it go down? Bonds demand, so money flooded out of equity markets today and poured into the bond market. Yeah, yields tanked today. Demand was surging for bonds. You can let me look at the chart of this one on the 10-year. Here's your 10-year, and it rallied right up to that 4.4 mark that we talked about, and now aggressively sold out of it. Even with a shooting star yesterday, this is a big down day for the yield. This is great for the markets. Great for the equity markets. It means cheap capital, but does this override the pain of the equity indexes in the broader market? So conundrum there today with regards to what happened with the bond market. But yeah, big down day. We saw a 2.5% slide in the yield of the 10-year. 4.25 is where it's at right now. Great for anyone who's in the market for a home. Yields should be getting lower and lower and lower. Margaret says, that isn't a channel also. It is. Yep, and I'll loosely put a channel on here. Again, when I do channels, I don't really go for specific points. I just like to see the general idea of that channel reflected. And yeah, I'll tailor this one just a little bit more like that. And then let's go create an offset. We'll clone that bad boy, move it down here below the lows. And I would make the argument, Margaret, that that's your channel right there on this one. So really interested to see how this one pans out here. Looking pretty weak on the yield returns today, and we'll see if that stalls out. But judging by the way we saw an exodus from equities today, if that continues next week, this yield will fall even lower. We'll come all the way back down to that, let's say 4.15, which is another 10 basis points from here. And then ultimately, if we get below that, you're looking at 4%, which could very easily happen and be on the radar there. Retest of that zone doesn't look good either. No. One little nail up there today on that 10-year, but yeah, it was a pretty big one, down 2.5% on the yield. Russell 2000 we looked at already, down 2.1%. Same picture. You got an aggressive sell-off, a nice little bounce up, and now all of a sudden going down here. Why do you choose the 10-year versus 20-year versus something else when looking at bonds? Great question, CB. The reason I use the 10-year is it's tied to many other things. So the 30-year fixed-rate mortgage is tied to the 10-year bond. That's predominantly why I use the 10-year. So by looking at what the fluctuations are with that 10-year yield, I can get an idea of what's happening in the mortgage markets. And if the mortgage markets, and that might look the same thing on the 30-year bond or 2-year. I do it because the 10-year is anchored off of this. So today is one where you probably saw the mortgage rates dropped to 10 basis points. That may not sound like a lot, but when you're pulling out a $300,000, $400,000 loan and you can save yourself 0.1% over time, that adds up to a lot of money. So CB, great question. This is why I choose that one, because it's just importance to the whole housing market. And again, if I see the trend right now, it looks like it's headed to the downside. That means that this is going to get lower. The yield's going to drop, which is what President Trump and Scott Bessent of the Treasury want. That means that housing will start to become more affordable for people. At least the loans for housing will get more affordable. There we go. Hope that answered your question, CB. Great one. Moving up the ladder here, we already talked about the S&P. Crude oil. Crude oil looking fantastic, but notice it's right up into this rally-based rally. It's only a 3-day rally-based rally that goes back into February, late February. We tiptoed into it on Wednesday, hit it again on Thursday, and then sold off out of it on Friday. Question for me anyway is, do we see the start to fall faster and retrace back down into that 67 mark, which is where we bounced out of? Or do we start to seek out higher levels right around 72.50? So that was a better performer, only down 0.8%. The dollar index showing 2 big down days, and this looks pretty similar to the equity markets, right? Dollar selling off here, just like the equity markets did. Typically, they should go the opposite direction, but they're not. And of course, gold, ultimately telling the story of fear and uncertainty. Classic collegiate textbook, the flight to security is gold. Yeah, it is. 1.74% gain today for gold, 3,114. And of course, you could look at other metals as well. Also had a decent day. Well, silver was down 1% to 31 bucks. So still have a ways to go for my my silver bars I bought at Costco to pay off. But we'll keep those for decades and decades. So not that big of a deal. All right, well, that's going to do it. I think I got most of it covered today. And for those that sent in questions, Kevin, thank you very much for that. Oh no, it wasn't Kevin. It was, who did the Lulu? Mark. Mark asked the Lululemon question, so thank you for that one, Mark. If you guys have something, again, anything that you think might enhance this show, make it more engaging for you, I am toying with the idea of doing a weekly newsletter as well, which will be no charge. Just one more thing on my plate to do, but I'm doing that with a purpose. That will be to create a database of viewers that I can, at some point in the future, if I ever decide to monetize this channel, I might be able to market to that. So I'm debating writing a newsletter because I enjoy writing articles about the market, but we'll have to wait and see. Let me know if you guys are interested in something like that. If I was to do a monthly or a weekly newsletter. And then, any suggestions you guys have for the show, the sooner you send them in, the better. If you have questions and things you want me to cover on the program in the future, let me know. Hope you guys have a absolutely fantastic weekend. I'm going to go and pound the rest of this nice glass of Surf City bourbon over here and enjoy my weekend. I hope you do the same. Thank you. Hope you had a great week. I'll see you next week.